Assalamu alaikum, everyone. Welcome to KSA Rising, your go-to source for the latest news and updates on the dynamic world of KSA real estate. I'm Kursat Osman, and I'm an indirect tax expert based in the Kingdom, specifically on the East Coast. And I've got a particular enthusiasm for all things real estate related, not just tax. So please don't worry. And I'm here, I'm extremely excited to talk about real estate, take you on a journey through the latest buzz in the Saudi property scene. So whether you're a seasoned investor, a first-time home buyer, or just someone who shares my passion for real estate, this is the channel for you. So today we're going to have a quick update on NEOM, and I'll be mentioning a few other developments of note. We're covering the meteoric rise in office rents in Riyadh, and we're going to touch on the new real estate registry platform. So first up is our NEOM update. We have the announcement of a new coastal wellness community by NEOM called Norlana. This development is set to feature 711 properties, including mansions, apartments, and beach villas. So there's going to be something for everyone. The community is designed to promote an active lifestyle, which means that there'll be lots of leisure and sports facilities as part of the development, with a golf course if you're into golf, and lots of equestrian facilities if you're into that. And of course, plenty of space at the marina in case you need somewhere to park your 200-foot super yacht. If you've seen the images, you'll notice that the terrain is quite rugged, so I'm hoping that there'll be some nice hikes and trails through the quite beautiful landscape up there. So Norlana represents the latest addition to NEOM, the futuristic multi-billion-dollar mega city that's evolving in the northwest of the kingdom. It's situated near the Gulf of Aqaba's coastline, so that's taking a right turn as you head north from the Red Sea, and is a gorgeous part of the country if you've seen the photos. The Norlana project is another sign of the commitment we're seeing in the KSA to create a holistic living environment that prioritizes wellness and health and sustainability, and is a clear move away from the purely functional utilitarian planning that we see in some areas of the country. The variety of property options also indicates a strategic move to cater for hopefully a more diverse range of residents, which is great to see. So it's not all about high luxury, top-end design and expense. Next, we turn our attention to the broader Gulf region, where the real estate market is expected to surpass $5 trillion by 2028, so 5 years from now. I believe this may have been reported last month, so this isn't brand new information, but it is being picked up again in the news over the past couple of weeks. I believe Dubai saw the strongest growth in recent times, according to the reports. The wider trend, though, is significant for Saudi Arabia as well, as it indicates a robust and a flourishing real estate sector. It also presents opportunities for investors and developers alike, with the region appearing to have sidestepped the global downturn that we're seeing in many other countries, especially in Europe. Investors are taking advantage and looking at opportunities now to diversify their portfolios away from some of those more established markets where they're feeling quite bearish. According to the UK developer Select Property, the value of GCC real estate, the GCC real estate market, is projected to reach 4.43 trillion by the end of this year. So, this is the last day of the year. So now we should be around 4.43 trillion. Now, residential real estate is dominating that figure, with a projected market value of 2.98 trillion. So almost $3 trillion of that is residential. The value is expected to show an annual growth rate of a modest 2.65%, and should result in a market volume of $5.05 trillion by 2028. So barring any black swan events, Saudi Arabia and the wider GCC region are looking like good options to consider if you are feeling bearish on some of those more established Western markets, for example, the UK, where I'm from. Office rents. We're going to move on to office rents now, especially in Riyadh. Kind of relates to that last story, but moving towards rental prices, we're going to look at the soaring office rents that we're seeing in the KSA, especially in Riyadh. Ostensibly, this is due to a property shortage, which itself may be related to a bunch of other factors, including the initiatives to attract multinationals to establish their regional HQs in Saudi. We can cover this in more detail in a subsequent video. Lots of commercial and tax-related incentives built into these schemes, including an epic 30-year tax holiday. That's a 30-year anything holiday is great, but a 30-year tax holiday, that's amazing. So we can talk about those schemes in more detail if you want me to put something in the comments, if that's something that you want to hear more about. So back to our Riyadh rents. According to Knight Frank and their 2023 H1 review, so up until the halfway point of the year, so not brand new information, lease rates for Grade A office space in Riyadh rose by 6.2% year on year. So 6.2% over the course of a year to 1,885 Saudi riyals per square meter. That works out to be about $503 per square meter. Don't expect me to convert the meters into yards or feet or anything. So it's $503 per square meter. The growing demand for Grade A office space in the Saudi capital has pushed occupancy rates to a whopping 97%, and that has unsurprisingly put upward pressure on both Grade A and Grade B office rates. Grade B office space is, in Riyadh specifically, is up by an even more impressive 17.3% for the year, with average rates of now 1,050 riyals per square meter. That's $280 per square meter. So let's just rewind a little bit, because I think that 97% figure needs to be underscored here. 97% occupancy rate for a Grade A office space in Riyadh at the halfway point of the year. So just to put that 97% in context, we had a recent report from Savills that indicated that the average European office occupancy rate, I can't remember if it was Grade A, Grade B, or a combination of, but the average occupancy rate in Europe, I believe, was something like 57%. So that's 57% in Europe compared to Riyadh's 97%. So, I mean, that's quite an improvement over 57%, isn't it? For completeness, let's quickly cast our gaze towards Jeddah and the West Coast. So Jeddah has seen Grade A office space increase by 12.7%, with average rates of now 1,200 Saudi riyals per square meter. Occupancy rates in Jeddah still very, very good at an almost equally impressive 95%. Dammam, the East Coast where I'm based, is a little more subdued, with Grade A increasing by a much more restrained 5.2%, hitting 1,000 riyals per square meter. We have a few more empty offices in Dammam too, with occupancy rates for Grade A reaching 80% still, compared to that European figure though, miles ahead. I think the Knight Frank report was originally published 3 or 4 months ago, so like I said, it's not brand new information, but we have seen some Q3 data for 2023 come in now fairly recently from the CBRE. The CBRE puts Grade A office rents at an average 1,000, so this is back to Riyadh again, 1,900 riyals per square meter, with a year-on-year increase of 12.9%. Now that is huge, 12.9% increase in rents. Again, grade B in Riyadh, again saw an even bigger jump, this time by 18.9% for the year, according to the CBRE, bringing average rates to 1,529 riyals per square metre. Now, the CBRE report has grade A office space occupancy at 100% in Riyadh. While many countries are struggling with office space and are expecting commercial properties to be completely demolished in the coming months, maybe even coming years, whilst many countries are struggling now with interest rates, hybrid working patterns, and all these other things, we have an example of full occupancy in Riyadh. Grade B office space is not far behind, at close to 99.5%, according to this report from the CBRE. Again, we're seeing similar rate increases in Jeddah on the west side, with 17.9% growth for grade A properties, whereas grade B fairly flat, with just a nominal single percent increase. I think the take-home message is that any office space, right now, any office space in Riyadh is doing really well at the moment because the market is just so tight. In Jeddah, there's a specific, grade B is still doing okay, but grade A is doing really well in Jeddah at the moment. So now shifting our focus onto the commercial happenings. We're going to change tack and talk about some of the developments that are coming up or have started. It gives me a chance to name drop a couple of the movers and shakers and talk about some of the great work that they're doing in the kingdom. Saudi Arabia's PIF-owned real estate company Roshan has signed an agreement with Ajdan Real Estate to develop 302 residential villas in the Sedra neighborhood of Riyadh. This agreement builds on the success of the first agreement that they had last year, as we see the partnership between Roshan and Ajdan seemingly getting better and better, going from strength to strength. The Sedra project, developed in 8 phases, aims to add over 30,000 residential units to more than 20 million square meters of Riyadh's urban landscape. The development will also feature something called Roshan Front, a multi-use destination for retail, restaurants, cafes, high-end offices, walking paths, and green spaces. And I love that they're making the walking paths and the green spaces an integral part of the scheme. I'm a big fan of the work that Ajdan has done. They've managed to achieve in my hometown in Khobar, with the very popular Ajdan Walk. They've produced a great development there. Maybe we'll see a bit of that magic used in the Roshan Front as well. So lots of interesting things developing there. Sticking with the commercial news, Saudi real estate company Dar Al Arkan has joined forces with global designer Elie Saab to launch exclusive co-branded villas within its Shams Ar Riyadh development. For those of you that don't know Elie Saab, he is an internationally acclaimed fashion designer based in Lebanon with a long career spanning many years. I believe he started early 80s, late 70s maybe. And this isn't his first foray into property collaborations, having already been involved with Amar for a beachfront development in Dubai. I think it was a couple of years ago now. For the Riyadh development, the villas will have that Elie Saab style in addition to the exterior concept, if you have a look at the website. Not diverting too far away from the kind of accepted designs, very kind of square and cubist in style. But his designs will also be reflected in the interiors. And if you check out the videos, I think you'll see more of the Elie Saab style come out in the interiors, with very plush, luxurious fabrics, surfaces made up of marble, lots of gold-coloured features. Personally, I love that style. That's my style. The Shams Ar Riyadh project is located in the north of Riyadh. It's becoming quite a strategic area of Riyadh on the King Khalid Road. extending over an area of more than 5 million square meters. Lots of other collaborations happening across that huge, it's a big development. Have a look at the designs. There's a really interesting step design on the website. Looks like the steps to a Mayan temple leading up to these amazing villas. Some really interesting. I love when they're creative with these designs. Some really good stuff happening. In terms of interesting design, MBS recently launched the master plan for Saudi Peaks, a luxury mountain tourism destination set over 3,000 meters above sea level on Saudi Arabia's highest peak. There are some beautiful stone designs as part of the scheme. Have a look at the website, some beautiful, beautiful buildings. And it's set in a very green and lush location with, I expect, some amazing views as well. So really looking forward to seeing that one come to life. As we all know, the Public Investment Fund, or PIF, is working hard to diversify the KSA economy by expanding vital industries like tourism, hospitality, entertainment, and Saudi Peaks will be a key part of that, I imagine. From the peaks of Saudi back down to earth, and more specifically Riyadh, and to the KSA's new real estate registry platform, which was launched last month. The platform will track and monitor real estate transactions, register mortgages, provide real-time data on the property market in the kingdom. The Minister of Municipal and Rural Affairs and Housing, Majid Al-Hogail, launched the real estate registry platform at the Saudi PropTech Summit held in Riyadh last month. He also spoke, I believe he spoke at the Global Leadership Summit earlier this month, although I wasn't there, so I can't be sure, so don't quote me. The new platform is currently in the process of going live with what looks like a phased approach, but it should be fully rolled out in the coming months. I'm hoping that it will lead to lots of usable data on the KSA market, stuff that we can all use and dig into. I love digging into the data. And it feels like it might be a step towards even greater transparency, something that I know a lot of potential investors from overseas would appreciate too. So that takes me to the end of this week's news. I hope you enjoyed it. If you've got any questions or topics that you would like us to explore, please drop them in the comments below. This channel is all about bringing you the content that you want. So hit that notification bell or the subscribe button or whatever it is. Join our community. Let's start a conversation and embark on this exciting journey together through the fast-changing world of KSA real estate. Until next time, take care.